Our unlock is slightly different, is really to focus on the business model, which is to say that, like, how do you understand these pieces of unit economics as they come together? And can we work with an exceptional founder to understand what each of those pieces are? And if we're able to understand that in depth, and they're able to convince us it's deepen, I don't think there are areas that we wouldn't consider.
Three offers a brand new petri dish.
Our job is to buy great tech at great prices.
AI is also libertarian, right?
Enable use case that people haven't been able to do today.
The next hundreds of millions of players, they will come to the market through mobile.
My personal reason why I could be bullish in the next 12 months is
Hey everybody, welcome back to another episode of the BlockCrunch podcast with me, your host, Jason Choi, angel investor and founder of Tangent. Now, as a disclaimer, nothing we discuss here is financial advice and nothing we discuss is reflective of our respective companies' opinions. We may also hold assets we discuss. Now, one of the areas I'm most excited about in crypto is using crypto networks to coordinate physical resources. So in a way, Bitcoin itself is such a network. It is a network that coordinates a network of mining machines. But turns out this concept can be applied to so much more, including storage, like Filecoin and Arweave, compute and AI, like Akash Network and Render, to mapping services like Hivemapper, and much more. Now, however, I know many people are also skeptical of some of these decentralized networks being able to compete with large centralized Web2 companies with a lot of economies of scale. So to tackle the entire vertical, one of the hottest narratives around, I'm very excited to be joined by Mahesh from EV3, a fund that focuses only on DePIN. So welcome to the show, man.
Jason, it's so great to be on here. You know, I've been a big fan of everything you guys have been doing for a long time now, and excited to dive into some of the nuances of DePIN. I know it's a sector that's getting a lot of attention right now, but it's also a sector that has a lot of underlying complexity to it in a way that I'm excited for the world to see over the next couple of years. So happy to dive into it.
Yeah, absolutely, man. And I'm always really excited to talk to investors who are focused on specific niche because that shows me that, first of all, they know what they're doing, and second of all, they have conviction. And usually the conversations there are the most interesting. So you guys chose to start a fund, you and your co-founder chose to start EV3 as a DePIN only fund. So what gave you that conviction? Because around the same time, I think there are a lot of generalist crypto funds that are just trying to invest in everything. Why did you guys go for just DePIN only?
Yeah, it's a good question, and I'll give you a slightly longer answer than maybe you were looking for, starting with just background. But I've always been incredibly interested in religion and philosophy. Part of it was, I had a super religious family growing up and spent a lot of time in ceremonies that I honestly just didn't want anything to do with growing up. And I think I got to age 7 and 8, and I started reading a lot about economics. And, I saw a similarity between religion and economics at that point that had always been super interesting to me, which was that they were almost incentive systems in a funny sort of way that people used to control other people, religion through divine providence, the concept of heaven and hell, economics through financial incentives. So I'd always been obsessed with incentive systems at scale and how people have used them throughout history to build amazing things. And, for that reason, when I found Bitcoin in 2013, and then Ethereum in 2015, it was one of those like aha moments of, oh my God, this combines a lot of like the incentive components of economics with a lot of like the buy-in components of religion with technology at scale, which was something brand new altogether. That said, I had Asian parents, Indian parents who, wanted me to go get skill sets, as they called it at that point. So I spent a few years first in banking and then in private equity. And private equity was where I started getting a lot of conviction around infrastructure-related ideas. I was at a firm called Apollo, one of the biggest private equity firms out there, really known for getting into the guts of companies and understanding how they work, and doing a lot of underlying work on them. And, the work that I was doing indicated to me that the last generation of telecom businesses and energy businesses just weren't as healthy as people thought they were. And funnily enough, I kind of cross-referenced that with my now business partner at the time, one of my best friends, Sal. He was an investor at Ribbit, so looking at a very different end of the spectrum, but coming to some pretty similar conclusions that like infrastructure would kind of have to be rebuilt from the ground up, and the way that infrastructure would be rebuilt probably wouldn't look anything like the last generation of it. So, we found DePIN through Helium in 2020. Was super interested in the project, spent a huge amount of time with them, ran their grants program for a certain amount of time, and just helped them scale. But, as they moved to the multi-DAO model, I think we became more and more convicted that this was a massive opportunity. And, other projects could kind of use this mechanism of aligning CapEx, aligning rent, aligning service-related costs across the platform to deliver a service that was just as good as the incumbents, but at a far lower cost. So I could talk for an hour, so I'm going to take a step back here and see if you want to take in any direction.
Yeah, no, that's a really interesting origin story. I don't think I've heard a story quite like that in terms of like having the basis of crypto in philosophy and religion. I thought that was very interesting. Thanks for sharing that. I think one thing that I'd like to dive into is kind of this theme on DePIN today, because this is not a new theme, as you mentioned, right? You've noticed some of these projects way back already, and then you've worked with Render so early on. And what I thought was interesting was Vitalik recently on Forecaster, right? I think earlier this month, he tweeted the question, is DePIN real? Because storage and Uber on chain, a lot of these ideas have been around since like 2017. So what's different now with DePIN this year versus like when you first heard about DePIN?
Yeah, it's a great question. And I think people were super excited to see Vitalik post about DePIN. I think he is someone that is obviously so well revered within the space that to start seeing the attention kind of accrue is something that people were really excited about. But I think his point is a good one, which is like DePIN hits at a more fundamental idea, right? Which is that in a funny sort of way, businesses for the last 100 years have kind of been built in one way, which is centrally, you hire a bunch of people, you create a product, you take it to market, and you scale it. And then Uber, Airbnb, and some of these platforms that emerged as a result of the app economy really started to play around with, the fringes of that to some degree. Okay, what if you start taking communities of people, just everyday people that are doing work, doing their jobs, and find ways to have them fill the roles that employees used to do, suppliers used to do. And I think this is the start of a movement that will take centuries, because the transition of work at its fundamental level from this highly rigid structural corporate framework to a framework where people have a bit more freedom to maybe work across jobs, work multiple jobs, have many income streams, is one that's sort of long-standing and at the earliest stages of its transformation. So I think Vitalik makes a really good point, which is, the first iterations of these, the Ubers, the storages of the world, I'll focus on Uber for a second, we're really working with the earliest framework for these primitives, which is like an app that was on your phone with bandwidth that was strong enough for you to actually be able to call the car and see in real time that the car was coming. But, the systems, i.e. the technology, get more powerful. The coordination, therefore, gets significantly more powerful as well. And I think what we've seen is with the advent of tokens and then the explosion of social media over the last 10 years, there is this potential for a community native business model that, software-based crypto kind of enabled at scale. Ethereum really enabled at scale. And now the rest of the world is coming around to seeing could work for their platforms as well. So, to take a step back and summarize, it really goes back to this transformation of work that's happening at a fundamental level, where people used to have one job, one career their whole lives and fill themselves to one role. But I heard this really great quote nowadays that recently, that nowadays people almost prioritize their identity over their self-interest. And that's a really poignant theme of our generation, which is like people care so much about who they are that oftentimes they will trade off economic benefit for that. And for that reason, as that sort of continues to proliferate, I think people will continue to find meaning in different kinds of works across different platforms, whether that's, okay, you drive a little bit. For Uber, you host a Helium router and you make some money creating bandwidth. You contribute your excess resources from your computer to something that Akash ends up creating and you're monetizing your excess compute. Like it's really amazing because it is fundamentally changing this paradigm of society from like people working for salaries and paying taxes to systems that let people be truly free and can even underlie the basis for things like UBI over time, which is, in my opinion, a direction that, we're already going in. And the income inequality that we're seeing in the world, and especially in the US, is just part and parcel to that. To your point, yeah, I think Vitalik is spot on. It's been around for a while. I think Uber was taking advantage of the earliest primitives associated with these platforms. And as new metas come to market, whether that's token incentives, whether that's targeting, as you've seen projects like HiveMapper use at scale, whether that's community-based work, these are all sort of converging narratives that over time I think are pillars of what DePIN represents. So, at an overarching level, I think that's the vision of why this is so interesting. And there's so many social factors at play that I think will drive this forward. And then lastly, just very quickly, the economic side of this is so important as well, which is that we've had businesses built one way for the last 100 years. Clayton Christensen, who's this HBS professor, has this amazing theory around disruptive innovation, where he pretty much posits that the new grade of products are never built the way the old grade of products are built, because otherwise the big incumbent companies would just do it. And that's one of the amazing things about crypto, right? Is it's so different than anything else out there. Like, you're taking fundamental regulatory risk and starting a company in the space that it just prices all the incumbents out of the market. So, for social and economic factors, as I've talked about, but also just for competition factors, I've never seen a paradigm emerge that could be so disruptive to the face of how work is already done across the world. And I think infrastructure is this really amazing wedge because it's so important today that we can really use to start building some of these platforms.
Yeah, I think that's a really good point that you brought up in terms of like UBI. I didn't even think about it that way. So you're basically saying, like, in the future, right? A lot of people are predicting that AI could replace a large amount of workforce, and that would fundamentally change what work looks like. So in your vision of the future, I could maybe not have a job, but I could be operating nodes for multiple DePIN networks, offering services, and I'm making my kind of salary through the rewards and fees that I earn from providing these services. Is that kind of the rough idea around that UBI concept?
Exactly. Look, I think we think about society as being really zero sum at the end of the day, when the fact is the stock market grows 7 to 8% a year, and 7 to 8% over really long periods of time compounds massively. So I actually think over the last 100 years, there's been a massive acceleration of techno capital whereby people have a lot more than they ever used to. And we're starting to get to the point where people can start monetizing that paradigm at scale. And yes, to your point, I think that's exactly it. Am I saying that people aren't going to have jobs 15 years from now? No, not at all. But what I'm saying is there will be big subsets of the population that can make ends meet just by hosting and deploying hardware services, providing people with things like bandwidth or compute power. And I actually think in the medium to long term, it's in the government's interest to make sure people have that opportunity because, the world is in a tough place right now. I think the US is accelerating forward, but a lot of countries aren't growing. And even within the US, there's a ton of issues inherently. And stability at the base of the pyramid to make sure people have at least like the basics to make ends meet is super important. And I see this as one of the genuine avenues that companies, people, even the government can kind of use to start solving these problems. So again, it's in the earliest stages, which is why I think there's still a huge amount of skepticism around it. And, DePIN, you can call it crypto, you can call it Web 2, i.e. the Uber equivalents, but it's this idea that you can decentralize capital and labor to create economic unlocks that give people better lives in the long run.
So I'd love to dive into the meat of things here. So we've talked a lot about the kind of theoretical benefits of DePIN and what it can do for the supply side. I'd love to, consider the demand side as well. So what kind of services are there in DePIN today? I think in the intro, we talked about decentralized compute, decentralized storage. What are some of the other examples or big categories in DePIN today?
Yeah, no, it's a good question. I think this has been answered 10 ways to Sunday by all of the different people out there that spend a lot of time thinking about this. My framework for this is kind of overarching three categories. I think there's hardware infrastructure, there's machine infrastructure, and then there's human capital infrastructure. And I'll dive into each of those to kind of elucidate. Starting with hardware infrastructure, I really think about this as either producing digital commodities or providing unique data that's getting created through hardware deployment. So digital commodities are what we've been talking about to date, bandwidth and compute power at scale. Storage is also starting to enter the equation. Storage has obviously been around for a while. Filecoin is scaling with a compute product as well. Some really interesting things happening there. But I think compute and bandwidth are really poised to break out in the next couple of years for a few simple reasons. One, there is just an incredible amount of latent, as you mentioned, supply out there, especially on the compute side. Akash is working with GPUs. There's a lot of companies, platforms that are coming up that can work across any sort of device. But there's so much idle compute power out there. I mean, think about the number of devices that we all have that are just kind of sitting around. I went through my drawer a few days ago. I have like 4 old iPhones. I mean, iPhones are pretty high-powered devices. Moore's law at the end of the day, compute power scales or transistors end up decreasing in size, which scales compute power exponentially. Yes, but even the iPhone 8 to iPhone 9 is still pretty valuable for what it's able to provide. So I think the supply side, as you mentioned, is already there. The question on the demand side of where that's going to come from is a lot more poignant within hardware infrastructure and within digital commodities. The way projects have gone about solving that is twofold. To take bandwidth as a starting example, the big example everyone knows is helium. There's another project actually called Andrina in the market that's doing some really interesting things as well. And so while helium pursued this approach of incentivizing people to put up hotspots in order to bootstrap the creation of a network from scratch, what Andrina is doing is actually going and wiring up buildings to create a basic footprint and then using their basic footprint to then incentivize people to create nodes. And what you end up doing through that process is you have a network that's already valuable. So you're not necessarily paying incentives that a user isn't sure will be monetizable in the medium to long term. If helium is a massive networked approach across the US, I think of Andrina almost like a hub and spoke approach, like the energy market for solar energy, where you have these big hubs of production and then you have these spokes of individual providers that are able to sort of contribute to that pool. I think Andrina is doing like $5 million of revenue today that it does from literally wiring up buildings and selling internet services. And they can use that demand side revenue to support miners in the earlier days to start solving some of these problems that everyone's talking about around cold start. I think even in helium's case, for what it's worth, look, I think the IoT network was a good idea that was a little bit ahead of its time. Everyone's kind of looking at 5G and saying, where's demand going to come from? Well, they have a phone plan that they sell for $20 a month. I mean, $20 a month is crazy. I think T-Mobile's most basic phone plan is $60 a month. And on a product basis, Helium's product isn't that different than T-Mobile's. Again, I mentioned this earlier. There's this HBS professor, Clayton Christensen. He has this whole theory around disruptive innovation, which is that the way incumbents get taken down over time is scrappier startups iterate on exactly their product, but with a far lower cost footprint. And that's kind of exactly what Helium is doing. If you have people host the nodes at the end of the day, you align costs across rent, because the telcos would have to go buy the land to put up towers. You align costs across the capex, because the telcos would normally have to either contract with the tower company or actually build the materials for the towers themselves. And then there's also the spectrum license angle, which is a longstanding thing in the US that has changed a lot over time. But recently the government freed up a couple of bands of spectrum around the 3 to 4 gigahertz range, which creates some really interesting opportunities for retail to pursue some of these ideas. So, long-winded answer to your question, but I think there's a lot of ideas that are emerging within DePIN. I think a lot of the supply-demand dynamics in digital commodities have really been scrutinized at scale, and was part of the reason why I think Helium's token went crazy in the last bull cycle and ended up coming back a lot. But by the same token, there's some really interesting mechanisms that these projects are using to solve the demand side now that I actually think are scalable. Andrina actually wiring up buildings and having revenue coming from customers. Helium working with providers like T-Mobile and Telefonica to create amazing nationwide footprints for low cost coverage. Those are going to scale the demand side massively. I actually think in Helium's case, it's a question of marketing. Which is something that they're thinking a lot about now as well. I can hit the other two as well. They're a little bit more opaque. The other two categories being machine infrastructure. I think about this as being some of the AI-based ideas. BitTensor is something that a lot of people in the market are really excited about. We host a podcast with a guy named Sami Kassab, who is excited as anyone I've ever seen about a project about BitTensor. I mean, he hosted this breakfast recently. He was showing me the wait list was 600 people. It was crazy. But look, I think at the end of the day, it's a category that's a little bit more nascent, and the supply demand dynamics will play out over time. The last category is human capital, which is platforms that either create supply of labor or people to do jobs. I think we backed a platform called Nosh, which is decentralizing food delivery, which deals with some really interesting dynamics in the restaurant industry. And, back to your original question of like, why do we even need some of this? I mean, take rates in ride share and food delivery are all over the place. They started around 12 to 15%. DoorDash is now charging almost 50% take rates on transactions because they can.
That's an interesting point that I actually want to double click on, which is the unit economics of these networks. So you mentioned there's three types of DePIN networks: the coordination of human resources, the coordination of machine resources, and the coordination of physical infrastructure. So let's focus on the first one first, because that one I think is probably the most established. Let's use either Helium or Andrina as an example. So I guess first of all, to zoom out a bit, for people who have no idea what these things are, have no idea what a mesh network is, can you explain how these networks work? And then subsequently, how exactly, where exactly does the cost advantage for these things come from?
So just to explain how these work very simply, telcos over the last 100 years have kind of been built in one way, which is you go buy a bunch of land, you go buy a bunch of metals, you go buy a bunch of chips, you put up those towers on the land, and then eventually when you have enough of a footprint, you go and sell that footprint through phone plans to customers on really long lockups. And then you go borrow a lot of money because the cost of doing all of this was crazy, and you probably spent, in today's dollars, between 50 and $100 billion doing this. That is the way every telco for the last 100 years has been built out at scale. What is different today is a couple of factors. One, the tower model that 4G used isn't really applicable anymore. We have such high needs nowadays in terms of the amount of bandwidth that small cells are becoming a far bigger part of the equation for these networks. The problem, though, is like Verizon can't go into 25 million homes and force people to install routers, right? It's just a massive human capital related lift and a coordination related lift. So at a fundamental level, 5G has this issue where even the traditional model that's worked for 100 years probably isn't going to work in this latest upgrade, because it'll have to be a combination of these towers and these small cells. The second factor to consider here is that during COVID, all of these telcos borrowed a huge amount of money. To stay afloat, to finance customers, and to buy spectrum licenses. So what is a spectrum license auction? I'll keep it super quick. The US pretty much forces you to, if you're a telco, pay for the radio waves you're going to use over a 10-year period upfront. So, the four big MNOs in the US, T-Mobile, AT&T, Verizon, and Dish, borrowed something like $100 billion to go buy these licenses to be able to use 5G over a 10-year period. It's been 2.5 years, there's no 5G yet. So they're sitting here saying, well, hang on, we spent all this money on these licenses. Are we ever going to actually be able to use them? It's unclear whether the answer to that equation is yes or no today. So, it is a framework whereby incumbents have a huge amount of debt. Their cash flow is down from where it was at the peak, and they have this massive rebuild at hand. Then on the other side of this equation, you have these protocols like Helium and Andrina. Okay, why are they interesting? Well, what they actually let you do is crowdsource and crowd deploy that radio piece that's so complicated for telcos to do, going into people's houses and either putting up Wi-Fi offload mechanisms or CBRS radios in order to actually drive peer-to-peer internet connectivity. So what these platforms let you do at scale is become that tower provider yourself. And that tower provider used to be a big company that would spend millions of dollars to put up the tower and then sell the footprint to a telco or partner with the telco to be able to do it, get paid back in 8 months for doing that. It's a good economics business. Now you get to do that. The customer gets to do that, and the customer gets to do that at scale. Why is that interesting? Well, let's think about the three big cost buckets that we were talking about. There's the rent, which is, these tower companies in combination with telcos, are going and buying and renting huge amounts of land to put up the towers. You don't have to do that in the Helium case. People are providing that. The second is the actual capex for the infrastructure. I mean, historically, again, tower companies slash telcos would spend hundreds of billions of dollars to do that. Today, customers are paying for it. Customers are being compensated on a variable cost basis for it through tokens. So the economics are still there for them. But it ends up being a framework where, telcos have a tough rebuild to do versus these low cost providers like Helium that, are able to just get 100,000 people to do exactly that day one. So you save a huge amount of cost on CapEx. You save a huge amount of cost on rent. And then lastly, there's the spectrum license point, which is that, people are paying huge amounts of money for spectrum licenses. Helium's able to use free spectrum today. And in partnership with T-Mobile, which is the partnership they have today, they can even contract to make T-Mobile spectrum useful in the long run. So across all three of those buckets, we think there's like 30 to 50 percentage points of margin that, traditional incumbents deal with today that these new players are going to be able to take out. And, we're extremely excited about that to the extent that it works at scale. These things will start as offload mechanisms for big MNOs. Will make good unit economics, but long run, the unit economics are so much better at a fundamental level because you've aligned across those 3 points that we think these things will scale nationwide and become really, really, really big.
And this is really interesting because I think in the beginning when we first started looking into DePIN, one of the concerns was, okay, there's probably some concept of economies of scale with the bigger incumbent, companies versus these like very, less efficient decentralized networks. And it doesn't seem like that's the case for these kind of mesh networks like Helium. But would you say that also extends to like decentralized compute networks? So for instance, like networks like Akash, where they are basically coordinating clusters of GPUs. I'm not a expert in AI, but my understanding is that there is some benefit to having clusters of GPUs sitting in the same place versus having coordinating a very decentralized network of GPUs. Like, is there type of structural disadvantage that decentralized networks might have over more centralized clusters?
Yeah, it's a good question. I think as of today, the jury's still out to some degree. There's this big issue around the speed of light, which is that like when you end up having clusters that are too far apart across the globe, like you start running into physics issues of the speed of light being fast enough to like actually transmit the information. I think as you look at the space today, generally the players that are working at scale are players that are US based. They aren't necessarily globally based and are working with infrastructure that is already fundamentally pretty connected. So, to your point, I think there is some sort of an unlock that comes from running a decentralized compute network. I think the jury's still a little bit more out though versus the bandwidth networks on the efficiency that kind of comes out of this. I think one of the amazing opportunities here is just around utilization at the end of the day, which is that, we have a GPU shortage right now. There'll probably be a glut on the back end. To the extent that that glut plays out with very low utilizations, you can see how compute networks like Akash can actually be extremely valuable in redistributing a lot of that connectivity that, would otherwise just be sitting idle. And I think that is a monetary unlock in itself at scale because you're creating, coverage that's worth something that wouldn't otherwise be worth something. But by the same token, the other side of that is, is it as clean on the unit economic side as something like the Helium provider, the bandwidth providers like Helium, where you can just kind of point to things? It's a little bit harder. But, the other side of that is it can scale a lot more fast because, you're not necessarily forcing people to buy a piece of hardware that they don't already have. You can let people start using hardware that they have lying around. I think, Akash pursuing the GPU route is an interesting one. I'd be very interested to see over time if, a lot of these general compute clusters end up getting off the ground that can use any device and support different types of computation. But I'm very bullish on Akash. I think it's a project that has a killer use case that could get to scale in the next 6 to 9 months. As a function of how quickly to scale the BD side. I mean, they're doing almost $1 million of ARR right now, which is pretty impressive with only, I think, like 150 GPUs, if I'm not mistaken, that are like actually actively used and leased. There's a question of how do you end up scaling the supply side of something like this, but I think that glut that I talked about to the extent that it ends up coming through, will solve a lot of those issues. So again, to answer your question, it's a little less clear than the bandwidth providers of the world, at least as far as we can see it, to just point to where the unit economics are really, really different. But I think the compute providers are solving a different problem, which is that there's a huge amount of latent capacity out there across devices that could be monetized, which is different than the bandwidth providers, which are solving a new market issue of how do you create 5G.
And it sounds like for the bandwidth networks like Helium, like Andrina, the cost savings is much clearer. There's like a structural business advantage to doing these things in Web3 versus Web2. Whereas for the compute networks like Akash and Render, there is demand currently, and a lot of that is driven by shortage of GPUs, but it's not as clear that there is a structural, efficiency advantage over time. I guess looking at other verticals in DePIN as well, are there other verticals where you also see as clear a structural advantage as you see in bandwidth providers?
Yeah, no, it's a good question. And look, I don't want to, I'm not trying to fade compute networks. I actually just think it's a kind of different proposition. Bandwidth providers look a lot like, even the new ones, like their business model still looks a lot like central businesses. They're selling phone plans to people. Whereas with the compute providers, it's like a very different underlying product that they're providing to the customer, which is why it's a little bit harder to point to sort of the medium to long term of one, how the unit economics look, and two, like how these things end up scaling. I think the range of things that the compute could be used for and compute providers could plug into is massive. And I think that's where a lot of like the theoretical opportunity lies. It's just a little bit harder to point to the underlying unit economics because, telecom businesses have existed for 100 years and Helium's phone plan is still a $20 a month phone plan versus like Akash's ability to, sell you compute is, sure, it's priced, but it can be on a more variable basis, and it's also a function of like what the underlying supply of the network is. So, a couple of factors that are important to consider there. I think there are other networks as well that could be extremely valuable within the space. I spend a lot of time on the human capital side of this because I think those are networks where, again, like bandwidth providers, you can kind of see the unit economics from Web2 businesses and understand how they'll comport to Web3 businesses. A project that we had never sort of considered we'd never considered DePIN, but then they branded themselves as DePIN, and we've sort of expanded the category since, is Brain Trust, which is, this labor-based platform that really works to connect pools of part-time laborers with people that need labor to some degree. And, they've really focused on software architects and compute providers, people that can provide technical skill sets to some degree. But it goes into this future of work hypothesis at the end of the day. And to the extent that Brain Trust feels that they're DePIN and they expend this category a lot, I think they should be considered DePIN. I think that's a project that took a lot of flack over the last couple of years. They have continued to scale revenue. They've continued to show really high retention, and we're pretty excited about where it's going. And then the last one to hit very quickly is, Nosh, which is this decentralized food delivery platform. I think very simply the problem with the incumbents lays in the statistic I gave you earlier, which is like DoorDash has gone from 15% fees to 50% fees. And everyone else on the network, all the other stakeholders are sitting there like, holy shit, where did all my economics go? So I think that creates a really interesting opportunity that didn't exist before, given that the driver side of this equation has almost been commoditized by the fact that you can just plug into an Uber or a Lyft API to build something that's very different, that has structural unit economic advantages, that comes from, in Nosh's case, the fact that a lot of the network is owned by the actual restaurants that are providing the service. So, you have a little bit more give and take around take rate. You have a little bit more give and take around how much each stakeholder makes. But at the end of the day, I think it is something that will end up balancing the incentives across the platform a lot better than sort of traditional models are able to. And, that is the most important factor here of building sustainable businesses over the long term.
And when you guys go out and look for these DePIN networks and you try to be early to them, I'm curious what the process is. Do you have kind of a pre-existing few categories that you think, hey, this is the type of network that could be disrupted by DePIN, or do you kind of do a more bottoms-up approach where you look at the unit economics? Is this thing actually structurally a cheaper option for consumers, and then you kind of just make decisions from there?
It's a good question. Look, I think as a starting point, like we are crypto investors through and through, but we spend a lot of time on business model. And I think, crypto is going through a maturation process whereby business model is getting more and more important, but there are a lot of industries where you can just point to kind of what it looks like. So, to answer your question, we have a starting map of all of the areas that we think could theoretically be disrupted by DePIN, but the fact is that's such a big map that it's kind of irrelevant in the context of our thinking. I think what matters to us when we are actually pursuing and underwriting opportunities is sort of threefold. Like, what is the structural take rate of the incumbent industry versus what the DePIN challenger intends to solve? And how are they realizing that difference in take rate, I think, is one of the most important factors. Two, I think having founders, obviously, that, are passionate about the industry, but also understand a lot of the nuances around unit economics informs our thought process more frequently than, you would think. I think we had sort of a more narrow categorization of DePIN coming into this, and we've just been told by founders that we respect a lot, like, hey, no, we are DePIN also for these reasons. And it's been a pretty amazing experience to kind of watch people even walk us through that to some degree, because it helps us understand these projects at such a deep level. The business model and unit economics are important. The founder and what the founder wants to do with it is super important as well. And then, as I mentioned, the incumbents and the take rate is like the thing that we look at to judge whether the opportunity is something that is, monetizable on a short to medium term basis. I think if all of those three things come together, it's a pretty good bet that at the very least, they will create something that is interesting and different than everything else out there, and will start to accrue some basic value. Whether it ends up crossing the chasm to full adoption, unclear, but that's how we get to at least trying to figure out what will get at least early adopters at scale involved. But again, it goes back to, I always love that old Mark Andreessen quote, which is to have like strong opinions loosely held. And that's kind of how we approach DePIN, which is people can convince us that things are DePIN if they're able to. And the fact is, if they're able to, we will look at investing in it at scale. But, those three categories that I mentioned make up our original market map for how we think about navigating the space to begin with.
I'm curious, like based on all the work and conversations that you've had with these DePIN networks, are there specific types that you find yourself more inclined to say yes to in terms of investing? Are there specific categories that you kind of not deliberately kind of categorically rejecting everything, but you just happen to be less convinced about projects coming out from that category?
Yeah, I think this is something that the fact is, at the end of the day, we're 28 years old. We started this firm 2 years ago. We have the benefit of having some incredible mentors at the end of the day that have taught us a lot, but it's a learn as you go process. And as we sort of put it, our North Star is really the founder and has to be the founder at the end of the day. So to your point, no, there is no project within DePIN that we just wouldn't look at because we think it's like not going to be relevant. I think if the founder is extremely strong and like can really articulate both the reasoning and the unit economics as well as the vision for why it could be interesting, like it is still something we would think about pursuing. But to invest in it at scale, you're right, like we would have to be able to underwrite the unit economics or be able to get our head around it ourselves. I think there is an amazing proclivity within crypto for projects to get backed and for those projects to not necessarily turn into businesses. I think a lot of the best VCs in the space have come up with really smart frameworks around how to get around that focus to some degree on the founder and the community. I think our unlock, which is slightly different, is really to focus on the business model, which is to say that like, how do you understand these pieces of unit economics as they come together? And can we work with an exceptional founder to understand what each of those pieces are? And if we're able to understand that in depth, and they're able to convince us it's DePIN, I don't think there are areas that we wouldn't consider. By the same token, what's really interesting to us, we spend a lot of time in digital commodities right now. I think it's an area that is structurally underinvested in. The internet's been growing at a 25% compounded rate since 2000, and the fact that Biden's throwing $5 trillion into infrastructure spending, I don't think is going to slow it down. And, some of the entrepreneurs in the space are just absolutely exceptional that are coming into the digital commodity space. So I think maybe if you're asking us where we tend to spend a lot of our time thinking, that's where we spend a lot of time thinking about digital commodities. But there's some crazy new sectors that are coming up that like I'm still struggling to get my head around. One is security finance. So, there are these like platforms out there that allow anybody to become like a white hat to some degree and like run code audits across platforms. There's this platform called Oticon out there that literally lets you mint NFTs that enshrine bugs that projects have using their sort of product to literally sweep the project to understand if they're bugs, and then they create a marketplace for that on the back end to funnel those insights to companies. I mean, you can find incredible ways to start crowdsourcing cybersecurity if you get a motivated enough crowd and the AI models are strong enough that people don't actually have to do a lot of work other than like putting in a URL and pressing go. So, the space continues to proliferate. I think there's a ton of interesting ideas at scale. We tend to focus on digital commodities because it's a space that's so big, as well as some of these human capital businesses, because it's a space where the unit economics are easier to get their heads around. But, I see things like security finance, which is just so different than anything that exists out there. It really hits this community idea at the end of the day of people at scale going out and doing a very basic piece of work in order to earn a monetary reward that could be substantial if it's incredibly valuable. And I see that as an amazing democratizing force that still drives a huge amount of financial value that wouldn't otherwise exist. And, that's really the paradigm that we are looking for and that we're looking for at scale.
Got it. Mahesh, just to kind of close this out here, I have two questions for you. So I guess number one is in terms of, a few networks in DePIN that you think are the flag bearers that are the most interesting to you. Can you name a few here so our listeners can go check them out?
100%. Look, I think across the three categories, there's a bunch of interesting ideas. I think the ones that people know a lot about are within hardware are Helium and HiveMapper. I think those are two really interesting projects that are doing some pretty cool things. You mentioned Akash is a really, really strong founder with a great vision for how he wants to build this. I would definitely encourage people to check that out. And also Andrina, it's a project that doesn't have a token yet, but it'll be launching its token in the next couple of months. And it's just a different approach to what Helium is doing. But again, a lot of those characteristics that I mentioned that, makes us pretty bullish about it. Across machine infrastructure, Bittensor is somewhere that we've spent a lot of time have a lot of sort of our partners in the ecosystem. The fact is there's still a lot of opacity there, and what they're doing is very, very different than anything that exists anywhere, i.e. like crowdsourced incentivization and funding of just new AI use cases. Is there something there? I go back and forth to some degree, but undoubtedly the things that are coming up are really, really cool. The question is, can you turn those into businesses? We'll see. There's a platform called Autonomous within machine infrastructure. It's one that I'm extremely bullish on just because I see people building things with the protocol that I don't see anywhere else. Like, what is Autonomous? It's a very simple agentic framework to be able to spin up on-chain agents to do various activities. But like their first product was a prediction market agent that like literally uses your trading history to run investment strategies from you. Their second product was like a governance product that like automates governance for DAOs, which I think is one of the most important things in the market today because DAO governance is an absolute mess. And again, really strong founder that's super passionate about what he's doing. Highly recommend people check that out. And, the security finance thing, it's super early. It's unclear whether any of these things are going to take off, but that's kind of what makes some of this stuff exciting. We spent a lot of time on Oticon and Aegis. We don't know the founders. They are anonymous, but, the protocol works and it's a pretty interesting thing. So highly recommend people go check it out. Last couple of things I'll leave you with human capital. Nosh is this decentralized food delivery platform that is going to be launching in the next couple of months in Colorado and then nationwide and is doing some really interesting things. They just got backed, I think, by A16Z's crypto startup school. So fingers crossed for how that goes. And then Braintrust is one that's kind of been in the market for a while, but they've really chewed glass to come up with a product that is pretty different than the Upworks and the Fivers out there, and they're scaling revenue pretty quickly. So that is a lot of projects for you. Hopefully that gives your listeners a couple of things to go look at after this conversation. But I think more importantly, like the space is growing so quickly that there's new stuff coming up every day and new stuff that you can't put in these neat boxes. And that's part of the exciting thing here, which is that like You wake up one day and you see something like security finance, and you wake up the next day and you see a different use case. And I think that's something that's really special about DePIN, which is that, it has become a sector that has almost become a flag bearer for all of the founders within crypto that didn't find like a nice, neat community within DeFi or gaming or L1s. It's become a catch-all community for people that are really interested in pushing this boundary of decentralizing capital and labor. And that's what I'm super excited about at the end of the day, because, communities of like-minded, motivated people are really what make growth happen in the world.
And Mahesh, my last question to you now, just to contextualize how early we are. So DePIN right now is ranked number 20 in terms of categories by size. If you go on CoinCatCo and you sort by categories, so it's about $30 billion in market cap if you add the value of all the tokens together. Now, in comparison, DeFi is about 120 billion. Stable coins alone is like 150 billion, and layer ones is obviously the biggest, is 2.2 trillion. So if you were to kind of, pinpoint a number here, how big does DePIN get within the next 2 years?
It's a great question, and it's a question that I spend too much time thinking about. And the fact is, all I have for you are kind of loose frameworks to think about it. Just to give you a statistic, I think as of right now, DePIN is less than 10% of total altcoin market cap. In the last bull market, DeFi went as high as 40% of altcoin market cap. I am still extremely bullish DeFi. I think there's a couple of things around financial regulation that make it a little bit harder to make scale in the next couple of years that make me think DePIN is going to be a category winner if we have a real bull run the way we did in 2021 and 2017 and 2015. So conservatively, my framework for thinking about this is I think DePIN will be somewhere between 30 to 40% of total altcoin market cap ex stablecoins. Now, you can then do the math to figure out what that's going to be as a function of how big you think crypto is going to get, whether that's 3, 5, 10, 20 trillion. But that 30 to 40% of altcoin market cap is something that we think this can consistently get to, especially because the underlying use cases of crypto are so dependent on this infrastructure to begin with, i.e. bandwidth and compute power. So that leaves a huge amount of room. I mean, there's room for crypto to 5x from here, and then there's room for DePIN to 4x within that. So, and that just doesn't even speak to how a lot of these things will end up working together over time, which I think you'll start seeing a lot of cross-sector collaboration. I think you'll start to see some of the projects within social and DePIN start to merge. I think you'll start to see some of the L1s and DePIN start to merge as well. And, at the end of the day, I have the saying that a lot of it is going to be DePIN, and I'm generally super bullish that it will be, more than anything, because I see these as killer use cases that have to come to market regardless. And to do so, i.e. provide them at such a structural cost advantage, isn't something that I think in the medium or long term companies or governments are going to pass up. So, I'm actually bullish that if there's a segment of crypto that governments end up being able to find commonality with, it's going to be this one. And that could drive not just attention, but I think more importantly, stakeholders that are thoughtful and who have their finger on the button to some degree into crypto in a way that I just don't think they are right now. So I'm excited to see that happen. I think there's still a huge amount of work to do, and this is going to play out over the next few years. But by that same token, the world is extremely short infrastructure right now. There's a reason the government is spending $5 trillion to shore up our infrastructure. And I think structural ways of creating that at far lower costs are always going to win, especially if they're empowering people to be more free and to have more income in their lives.
Yeah, and I think that's a great way to kind of close this out on. Thank you so much for giving us that high-level overview and also diving into the specific names. So for listeners out there, we'll include some of the tickers below as well that you can go check out. And we'll also plug your Twitter below for people to follow you. So thank you so much for coming on, man.
Yeah, that would be great. We run a platform called deepin.ninja. If you're ever interested in the statistics around the stuff, revenue numbers, we map all the projects across the space. We've got like 800 of them right now. So go check it out if you're interested in Deepin. And we also host the Proof of Coverage podcast where we talk to some of the smartest founders in the space. But yeah, I'm Monero Mahesh, and this has been awesome. Thank you so much for having me on.
Hey, thanks for supporting another episode of the BlockCrunch podcast. If you've enjoyed this episode, please give us a 5-star rating on Spotify and Apple Podcasts or whatever platform you're listening to this on. It really helps us a lot. Or if you prefer YouTube, you can subscribe to our channel on YouTube as well to not miss an episode. I'd love to hear from you guys as well, and I personally make sure to read every single comment on YouTube or tweets that are directed at me. So feel free to leave a comment there. Let us know what project you want us to bring on or what trends you want us to talk about, or tweet at me at Mr. Jason Choi or at the BlockCrunch on the platform previously known as Twitter, currently known as X. And thank you so much for supporting, and I'll see you in the next episode.